Good morning, everyone. I will wait for other participants to join. We will start this podcast in another 30 seconds. Good morning, everyone. Welcome to Pre-Bell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. Today is October 21st, Friday. Before we go ahead into the presentation, I would like to state the disclaimer. Whatever stocks we discuss in this podcast are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart taken from MarketSmith India's web page to get an overview of how the overall market is placed at the current moment and how are we looking at the Indian market at the current moment. You can see in the last 5 trading sessions, Nifty has closed in the higher end, that is in the green, which is a very constructive sign on the price front. However, on the volume front, if you look at all the 5 blue candles are clearly below the average volume. That indicates this rally is happening on lower volume, which is not a very good constructive sign. When the market is inching higher, we would definitely want the volume also to be on the higher end. That indicates fresh investors are coming into the market, that is institutional investors are taking the market higher. However, this rally which happened in the last 5 trading sessions is mainly because of retail investors which are pushing the market higher. There is no strong support from the major institutional investors. On the moving averages front, you can see currently Nifty is trading above its all key moving averages. Recently, it has reclaimed its 50 DMA, that is the last 2 trading sessions. Yesterday's action was also very good. You can see it opened on a flat to negative basis, and on the closing basis, it closed near the day's high. And also yesterday was a weekly expiry of Nifty and Bank Nifty options. So there was some zigzag movements during the day. However, the volatility relatively was slightly lower when we compare the weekly expiries with yesterday's movement. On the market structure, we are currently in rally attempt. We have been sending emailers, that is on the morning and evening emailers as well. We are looking for a follow-through day, that is Nifty advancing 1.5% or more on volume higher than the previous session. This is very important because follow-through day indicates that fresh amount of institutional investors are coming in. That gives a hope of fresh rally about to start. These kind of rallies can be very deceptive. That is in the last 5 trading sessions, rallies have been very deceptive because volumes have stayed on the lower side. But to get a constructive, very strong feeling that the rally is about to start, then follow-through day gives a very good indication that there is a good amount of institutional investors taking market higher. So that is very good sign to start increasing the positions in the market. Until then, we will be staying sidelines, and we are looking into a few of the stocks which are very good on the technical front and fundamental front both, and only lens they are standing very good on the parameters as well, and which are about to break out or which are giving an alternative buy points. We have filtered around 7 to 10 stocks which are very good and resilient in the current market. As soon as the market status is changed to confirmed uptrend, definitely these stocks will be added to model portfolio because these are very these are outperforming the general market. So definitely the when the market moves 1%, these stocks will definitely move more than 1%. So it's very important to catch those big moves early before. Talking about some other companies which will be under focus in the today's trading sessions, or some other companies have reported their results. Major companies, that is FMCG, major ITC, has come up with their September quarter results. The results are very good. They came in above street estimates. So definitely we are expecting a positive opening on the ITC front. Let's see how the stock opens on the market and how the investors take these results. To talk about the results, revenue has grown nearly 27% year on year to 12,700 crores, whereas bottom line, that is profit after tax, has increased nearly 20% to 4,400 crores. And another major leading private bank, that is Axis Bank, has come up with very good results both on top line and bottom line. Net interest income, which is a very key parameter to look into in banks. That is, net interest income is a difference of net interest expenses minus that is net interest income minus the expenses they have paid to the loan for their deposits. So that is a very key parameter in any bank. That NII has grown 31% year-on-year basis to 10,360 crores. Whereas PAT, you can see clearly it has grown 70% to 5,300 crores. This is majorly because of lower provisioning the bank has done. They are very happy with the loans they have provided, and they don't see any fresh NPS coming. They are seeing very less NPS when compared to the previous results. So that is the reason they have increased the provisioning. So that's the reason PAT has grown multifold when compared to the top line. Another FMCG company, that is Tata Consumer, has come up with the results. They also gave very good results. Revenue has grown 11% to 3,300 crores, and PAT has grown 36% to 390 crores. Another NBFC company, that is major non-finance bank, non-banking finance company, that is Bajaj Finance. NIA has grown 31%, very similar to Axis Bank, to 7,000 crores. PAT, again, you can see it has surged to 88% to 2,700 crores. Assets under management have also increased 31% year-on-year basis to 2.2 trillion rupees as of September end. Asian Paints, they are doing a capex of estimated capex of 2,100 crores in the next 3 years to set up manufacturing facilities of vinyl acetate ethylene emulsion, that is VAE, and vinyl acetate monomer, VAM. These plants will be established in India. The capex will include acquisition of land as well. The installed capacity will have a capacity of 1 lakh tons for VAM and 1.5 lakh for VAE. And some of the other companies, major companies, which will be reporting results today during the trading session and after hours, are major company Reliance, HUL, Bajaj Finserv, and 2 life insurances, that is SBI and HDFC Life, JSW Steel, Ambuja Cements. So definitely these stocks will be under radar. These are some of the major companies which will be reporting. There are other companies as well, but these companies are very big companies that are on market cap front, and they also have very good ratings. That is the reason we have picked only a few stocks to highlight here. If you have any of these stocks in your model portfolio, that is your portfolio, definitely these stocks will be under volatile. They'll be volatile moves during the trading session. So please be watchful of your holdings. Talking about the global markets overnight, US market have closed in the negative territory. The magnitude of decline is not so high. Dow Jones has closed 0.3% lower, Nasdaq 0.6% lower, S&P 0.8% lower. Asian markets are a slightly mixed bag as we speak. Shanghai is trading in the positive territory with 0.5% higher, whereas Nikkei and Kospi are trading 0.2% lower. So definitely there is no clear sign of momentum coming into markets today. SGX Nifty is also indicating a similar action in the Indian market as well. Muted opening, that is yesterday Nifty closed at 17,560 level. So 10 point here and there, it's not a big opening. So definitely it's a muted opening we might see on the Nifty front. And there would be much a big momentum in the markets because global markets have not done the magnitude of global markets closing is also not high. So we might expect Indian markets also trading in the similar lines. For the chart of the day, we have picked Coal India. Currently, you can see it's breaking out of its consolidation base. Actually, it has exactly trading at its pivot, that is 241. Um, this is a second stage consolidation base. You can see clearly the stock is trading above its key moving averages. It is also trading near its highs, that is all-time highs. There are many parameters which are looking very good in this particular company. Starting from fundamental ratings, that is EPS of 91 indicates a strong profile of company on the fundamental front. Technical ratings are also very strong. You can see RS line is trending higher and also hit blue dots, which is a very good sign on the technical front. Number of funds, which is our other major parameter we look into in stocks. Uh, that is also very good. You can see on each quarter, the company has added fresh investments from institutional investors. That is a very good sign. Institutional investors taking positions in a company is a very good sign for the company because they will be definitely providing support in turbulent times. You can see this stock has very good support at its 200 DMAs and 50 DMAs as well, because the institutions will definitely try to give support to stocks when they are touching the key moving averages for a fundamentally strong company. So that is the reason we want the support of big investors having good chunk of their positions into the company. So on the overall front, on the O'Neill front and other ratings front as well, both the fundamental and technical ratings are indicating a very good constructive setup for the company. Uh, Definitely, if you have this stock in your portfolio, you can continue to hold it. Also, you should always keep your stop loss in the system, not in mind, because you never know what happens in the next trading session. So you can try to keep stop loss below its 50 DMA, 1 or 2 points below 50 DMA. If that level is reached and if the stock sustains below 50 DMA, definitely you can exit. Otherwise, you can continue to hold it. However, fresh investments at this moment, given the market structure, we are not advising at the current moment. Thanks for joining today's Rebel. Hope you have a good trading session, and we hope to see you again at today's after hours, which is at 4:30 in the evening. Thank you.